Good morning, folks. I hope you are well. So I have four pairs on watch today. Those are Euro dollar, pound, Kiwi, West Texas oil, and Aussie dollar. So I'm going to break them down for you now, give you my thought process, but I'm going to have to go pretty quickly because I have four pairs to get through today. So on the higher time frames, Euro dollar. As I've mentioned previously, we have this 1, 2, 3 touch structure overall, okay, which has a clearly identifiable middle section within it. We tap into this last exchange of liquidity where there was volume, which caused a rally to the upside last time it was tapped into. So therefore, the people that caught this sell position to the downside, that would make sense why they would be getting out of their positions at that area there. Okay, what happens? We break below, which is typically what we do on the higher time frames if we're going to move to the upside. So this represents a bargain area of value for the bigger players, and then we move up aggressively. Okay, we then tap into this exchange of volume here, this liquidity point here, where there was an exchange of volume which caused this runoff. We do so by way of a 1, 2, 3 touch structure. The second touch breaks above the first touch but doesn't tap into this area. The third touch breaks above the second touch and taps into this area. And as I've just said, on the higher time frames, on the flip side of this move down here, we typically break above if we're going to move to the downside, catch people the wrong side of the market because this, for the bigger players, represents whatever the inverse of a bargain is. Okay, so better value than if it had just tapped here, tapped into that area, and we move to the downside. We then break below these lows here. We have a near miss to this low. This low near misses here, suggesting that if we near miss to it, but we don't quite tap it, that these lows which we near miss to still represent high areas of value for a potential buy. Okay, we see that a lot with these near misses. They often get filled. We break just below once again, and then we move to the upside. So the same psychology repeating itself over and over. You can even see here, which is why yesterday I was looking for short trades. We kind of have this exchange of volume here. You can even see that before I even drop down. We tap above, push to the downside, and now we have this kind of evening star formation. Of course, this weekly candle has not closed yet, but as I drill down, things get a little bit clearer. So we tap into this exchange of liquidity here where there was volume. Okay, so you can see all this volume here. We tap into the area, break above, push to the downside. This high breaks above this high, but doesn't quite tap into it. This high breaks above the second touch and taps into the volume, and then we move to the downside. So psychological patterns repeating themselves over and over again. So yesterday, you can see, look at the last daily close. I didn't manage to get an entry. I was looking for entries, as I said I would be in my forecast. I was looking for entries in the 1 hour, but this is what I said about the nature of price. This was just one until we dropped out. This was just one corrective move down. And what happens in nature theory, if we move down correctively, then an impulse up in the other direction, how far that goes remains to be seen, but an impulse up in the other direction therefore becomes the more likely scenario. Okay, meaning that if you were to get short on the break of this correction here, if I was to filter this on the 15-minute, you could be tagged in, tagged out, and then price forms something slightly larger, and then you don't take the re-entry because your psychology has been affected, and then that plays out, and then you're kicking yourself because you missed the re-entry as well. So these are the psychological games that take place. But when the market moves down correctively, that means that, what I was looking for was a dropout like this. We've seen that now. So now I can separate the structures. I can see, okay, well, this is one piece of its own. We dropped out aggressively. Price is now forming something else. So that changes the picture and, makes me more interested in an entry, even though we're closer to this low. So this may only be a short-term move because if we look at the DXY, the DXY may tap into this area of value. This is the dollar index. Okay, we may be pushing up to here before we then sell off. Okay, I'm not going to break down the whole picture. So if the DXY moves up to here, then it's likely that euro dollar is selling off. Where is it selling off to? Well, for a similar length move, it may only sell down to here, okay, because there was a sharp move down followed by a sharp move up, which suggests that there may be a liquidity here. before the longer term direction on the DXY kicks in and we start to sell off, which would then cause euro dollar to move to the upside. Okay, so you might think, well, there's not much profit potential in this move to here, from here to here. Well, first of all, we don't know if it's going to stop there. Okay, all we need to know as traders is if we can get our risk off the table, and as long as we can safely, then the market could keep going. Okay, the market doesn't have to stop and reverse anyway, but regardless, it doesn't have to stop and reverse anywhere, rather. Okay, but this does actually change my entry criteria. Okay, ever so slightly. So whereas yesterday I was looking for a reduced risk entry on the break of a flag such as this, I won't be doing so now, because if we do stop and reverse in this area, there is only a profit potential of about 1.5% there. Okay, meaning that if we do reverse from there, let's say I'm trailing my stop loss, I may move to break even when we push down, and if price suddenly reverses from there, then there's potentially no profit potential in this trade if I'm trailing my stops, if you see what I mean. Okay, so I would walk away with a break even. So we always we need to size our trades up, okay, to see if there's actually any profit potential if price stops and reverses from the first notable solid inflection point. Okay, so in this instance, what I'll be doing is I'll be looking for a risk entry within the flag, because if we get that, then if we do reject from that area, there's a profit potential of approximately 6%. Okay, and even if I was to trail my stop by this point, I would likely have my stop. Even if I only locked in half of the move, that would be something in the region of 3%. So that even if we rejected from the area and pushed up, I would walk away with 3% profit. And if we just analyze this on the 15-minute chart, you can potentially see where the start of the structure is. Okay, so we may get, if we get this kind of this three-touch structure, which I'm anticipating, if we get something like that, price taps in, then I can get short with a risk entry within there, and then I'll be able to manage it down to the low which I've got marked on there. So I'm just going to see, that looks a little bit undeveloped at the minute. You have to remember that we've had quite a big move down. Okay, and after several little corrections, my trading plan states that I only take a risk entry within a correction, not a reduced risk on the break, because the market, after a big move like this, needs to breathe a little bit. So so I'm waiting for if you think of it like an archer pulling back the bow on a bow and arrow, the market needs to breathe before it can continue. Okay, when we're higher up in the run, the market doesn't need to take as much of a breath, because it's already tapped into volume. Okay, which tends to be the causation of the move. Whereas once it's a little bit further in, it needs to build a little bit of volume for the next move to the downside. So what I'm going to do here is I'm just going to leave this, and afterwards I'm going to set a Google Calendar reminder to remind me to check this in a couple of hours time to see how it's shaping up. If it does shape up, it will likely shape up, I don't know what's happened here, right, there we go, it will likely shape up at the beginning of the New York session, just looking out at how price is formed. So pound Kiwi on the higher time frames. Pound Kiwi, I said yesterday that I'm just disregarding this wick, because on all time frames, I'm not going to go to them all. On all time frames, this just appears as a wick, which suggests that it is merely volatility. And what we're trying to do by analysing these structures is ascertain the sentiment of the market. Okay, not analyse wicks which look like outliers within the overall structure, if that makes sense. So with that, if that's just a volatility wick, then what do I see here? I see we've tapped into this area, we've broken above, caught people the wrong side of the market who started buying once it broke above. We've crashed to the downside. We've even got, to some extent, this kind of left shoulder, head, right shoulder. We pull back. This is a bit of a steep pullback, you can see here, but we pull back about 50% of the move, so that's a healthy pullback. And now we're consolidating below this low. And if the sellers are on board now, if this is just a correction for the next leg lower, and the sellers are on board, or will fully be on board, if my entry was to shape up, where do you think they will be getting out? They would likely be getting out of their positions here as a solid first target, which is likely where we would consolidate for a period of time, even if we do push lower, because because there was a sharp move down here followed by a sharp move up, and this stands out clearly on the weekly chart. Okay, so as I drill down, you can see the consolidation there. Okay, nice sequence on the way down. if I just drill down a little bit more, we have a fairly nice sequence of tight flags into slightly larger corrections, a little tight flag on the break of this. This all looks like a reliable sequence to me. We have a sharp move up, sharp move down. I said to you yesterday that if we just sold off from this high here, I had an alert set here, and I said if we just sold off from here, that I would just take this off of watch, and I pretty much disregarded this pair for the whole day. Why do you think price keeps selling uh, from these little minor inflection points within here? It's likely because people are too zoomed in. If you zoom out, this is one of the things you can clearly see that this is the back end. Uh, this area of value is the back end of this structure. It's also kind of the retest of here. And as we drill down a little bit, you can see that this is where this so after we broke out of this consolidation and moved to the downside, this is clearly where the structure started. Okay, so all the people trading within here, where are they likely to have their stop loss orders? Where are the bigger players likely to step in for the move to the downside? Here. But people are so zoomed in, they're probably on the 15-minute chart looking for entries. They're scanning through all of this noise. They see price come up to here. They go, right, sell. And this is what the amateurs typically do, right? Let's sell. It got to here. Okay, it comes back up. They're looking at these areas. There may have been a bit of FOMO in here. We may sell from that area again, but if we just zoom out, you can see where the structure started. It started here, okay? So with that in mind, what I'll be looking for, this may just keep going sideways. This is a characteristic of pound Kiwi. This may just keep going sideways for the rest of the day, which is fine. If it does that, I'm not going to be trading with all the people that are too zoomed in. I'm going to be looking at this area of value here and waiting patiently for price to tap into it. And if it does, I'll be waiting for a push down and a flag, and then I think the floodgates will likely open. If you just remember what I said a moment ago, I said that the market has to consolidate for the bigger moves to occur, right? Now, a characteristic of pound Kiwi is that it consolidates for a long period of time. What that means is because it consolidates for so long, when it does eventually pop, okay, the moves tend to be very aggressive. Okay, you can see evidence of that here. We kind of tap into this area. Okay, price consolidates for a long time, then look how aggressive that sell-off is. We have a big long sideways correction. When it does finally sell off, look how aggressive the sell-off is. Okay, so we see these things over and over again. You see the same thing here. We consolidate for a period of time. Look how aggressive the sell-off is when it does actually happen. So that's because the bow has been pulled back further than on some of these other pairs, which is why something which to the untrained eye that could look messy can be very lucrative if you actually know what you're doing. So that is pound Kiwi. That's what I'm going to be looking for. Let's move on to the next pair, which is West Texas Oil. So West Texas Oil, if we just analyze this, you can see on the higher time frames what happens. We have we have this near miss. We have this high here which breaks above this high. Okay, we then break above that. Okay, we start to sell off, a little fake sell off, most likely because we hadn't actually sold off. Because there was higher areas of value above. Okay, so we then come up, we break above here, catch people on the wrong side of the market. So we have that kind of structural, this expanding pattern. We break out of that, which confuses people because they think it's going to the moon. It breaks above here, catches people the wrong side of the market, and then moves to the downside. Okay, so and then we move to the downside. This is slightly lower on the list because this is not your. I've just noticed that I don't know why I've got all these price things that have come on the right hand side, but this is not the greatest looking sequence. Okay, you can see we've done what we needed to do. Price is tapped above there. It's moved to the downside. It's pushed to the downside. We then had this area of volume. Okay, we tap into that area of volume, break slightly above, and move to the downside. So if the sellers are well and truly on board now, which you can see it appears that they are, where are they likely to get out of their positions? They're likely to be getting out of their positions at these lows here, or more likely here, because this low near missed to here, and I've just cut through this wick because once again on pretty much all time frames this appears as a wick, suggesting that it's merely volatility. Okay, if we just switch to the line chart, you can see that that big wick doesn't appear. Okay, so we have a near miss to here, we have a near miss to here, suggesting, given that we've tapped into all of this volume, that the sellers will be getting out of their positions around here. okay, which makes a potential short trade a likely option. We can separate the structures to some extent. If we just zoom down, you can see, if I just zoom in a little bit, so you can kind of separate these structures. Okay, the sequence, we pull back here, we pull back like about 70% of the move. So that's not as typical. So that makes this sequence slightly less reliable. Okay, but you can see here we tapped into this area of consolidation here, which just so happened to be the retest of all of this structure here. We break above. We do so by way of a one, this kind of ending structure, this 1, 2, 3 with a middle section. We then come back up. We retest the back end of that and then move to the downside. And now we're trading below this consolidation here, which means we may be able to capitalize on a move, further continuation to the downside. So as I drill down, you can see solid 4-hour push down. So now I'm looking on the 1-hour chart to see if anything's shaping up. And if you analyze this, okay, what you can see here, if you look at this on the 15-minute chart, what do you see? Sharp move up followed by a sharp move down, okay, which just so happens to be the retest of the back end of this structure here, okay? So what I'll be anticipating, given the proportions of this move down, although we do have a little tight flag here, I think so far into the run, you're asking to be tagged in, tagged out, and then price forms something more, slightly more developed. So with that sharp hook point there in mind, what I'll be anticipating is the following, and I'm going to have to speed up a little bit here, something like this, and then for the same reasons as on euro dollar, I will be, so that I can manage it to these lows, I'll be looking specifically for a risk entry within the flag, not a reduced risk entry on the break, which skews my risk to reward. And then I'll be looking to get short with the risk entry, with the first solid target being down here for something in the region of 6.5%. And I think it's likely that if we tapped into that, we would take out those near misses, those lows that we near missed too. Okay, so that is West Texas Oil. I have an alert set to see if we push up to what is a sharp hook point on the 15-minute chart, and if we do not, then I will not be looking to place a trade. So Aussie dollar on the flip side. So if the DXY gets to that little inflection point, okay, and then it sells off, there's a chance that if we do push up to that and we start to sell off, then obviously Aussie dollar is likely to move to the upside as the dollar sells off the US dollar. Okay, so that is partly why this is on watch. So we tapped into this area here. We got to that area correctively. We tapped into this sharp move here. Okay, we moved to the upside. Yes, there's a near miss to here, but we don't have to fill these straight away. What we do have, you can see here, we have kind of sold off, but we've kind of sold off from nowhere, right? Okay, and what may be happening is this may be a push up to take out these highs, which this high near missed too. Okay, it may not look like that so much on the daily chart, but as we drill down, you can see that we've overall, if I just zoom in because I'm running out of time, this is not the most, this is quite a corrective move down. Okay, we had a little bit of momentum here, but it's quite a corrective move down. So what I'll be anticipating from this one, I don't think this is likely, but it doesn't matter what I think, right? What I'll be anticipating is if we break above, now I'm specifically looking for a break above this here. Okay, if you look at this on the 15-minute chart, this has just been corrective. Now what this could be is, this could be, because we've moved down aggressively, this could be some kind of bear flag to push lower. Okay, we have to be mindful of that. However, what negates that, if we break above this high here, okay, that would negate that. If we corrected afterwards, that would negate that. And then if we do, we've now tapped into that area of value. We may be pushing into this one, which is another matter altogether. But if we break above here, flag, then I'll be looking to get long either on the break of the flag or within it, to take out this high and the high that this high near miss too. So that is the thought process. I've tried to get through this as quickly as possible. I hope you've taken some value from this, and I will see you again in the next video. Thank you very much indeed for watching. Enjoy the rest of your day.